Hello everyone, this is Arvind Akash. I'm happy to see you all in another video. Actually, on Tuesday, I posted a forecast video in which I shared my view on the fundamental news events which are yet to be released this week and how it might impact the market. And also, we did a forecast in a technical point of view on euro dollar and Bitcoin. So in this video, we'll do a follow-up on how the fundamental news releases has impacted the market, and also we'll do a follow-up on how the euro dollar and Bitcoin has moved so far. First, let's start with the US Federal Reserve rate cuts. Actually, the US Federal Reserve has cut rates by 25 bps to 3.50 to 3.75% as widely expected. Fed's chairperson Powell adopted a dovish tone, suggesting further cuts could follow and that rate hikes are unlikely. So, how this impacted the market? The US dollar weakened broadly versus majors as market priced in future easing. Also, the Euro USD rose towards dollar 1.17 plus, and USD CHF and USD JPY both declined as trader reduced USD longs. Markets now see elevated chances of additional Fed cuts in 2026. Actually, why it mattered? The dovish messaging amplified expectations that the Fed will continue loosening monetary conditions, weighing on the dollar into year end. So now let's take a look at the next news event. It is from the Bank of Canada. What happened here is the Bank of Canada held rates unchanged at 2.25%. As markets expected, policy was viewed as neutral or slightly dovish given slower inflations. How this impacted the market? Actually, the Canadian dollar strengthened modestly on this decision, putting slightly downward pressure on the USD CAD. Oil prices and global risk sentiment remain key drivers for CAD beyond just Bank of Canada policy. Why it mattered? Actually, with no surprise moves, CAD's gain reflected broader dollar softness and commodity price support. The next thing that happened is the Australian dollar news release, where although it's not explicitly detailed in headlines, markets broadly held expectations for the Reserve Bank of Australia to keep rates unchanged, similar to the trend in other developed markets. Prior anticipation of unchanged policy contributed to pre-event AUD strength against USD as dollars softened from Fed moves. So how this impacted the market? Actually, AUD USD rose alongside the broader decline in the US dollar ahead of the Fed's announcement. The next is the CHF. What happened here is the Swiss National Bank kept rates on hold at 0% and reiterated its expansive stance. SNB officials said they remain ready to intervene in FX markets if needed and see inflation pressure stable. How this impacted the market? Actually, the USD CHF briefly climbed as traders shrugged off safe haven CHF demand. CHF remained suppressed rather than strengthening strongly despite global risk, showing markets are focused on yield differentials and SME's commitment to lower rates. Why it actually mattered? With SNB holding policy, CHF moves were more driven by USD technicals than Swiss fundamentals. So these are the news events that happened this week, which impacted the market. Now let's move on to the Euro USD analysis. Let's take a recap of my analysis and see how it has developed now. So looking at the weekly chart, we saw that the price has broken above a strong resistance zone and is holding above it, where the indicator supported the bullish view with creating higher highs. So the weekly was bullish, and on the daily chart, we had a bullish price structure with the price creating higher highs, higher lows, and I was expecting the price to push higher further after this correction, possibly a deeper correction in the form of double wave down towards the second support zone, or I said that this might be a direct move from the first support zone. The price was actually, playing in the first support zone and it was holding. So there is also a good chance that the price might move higher from this zone. So this is what I expected. And moving down to the H4 chart, we saw a downtrend line breakout. The price retested this, and the price, which was moving higher, has created a bullish trend structure. So basically, I was expecting pullbacks towards the two strong support zones and further continuation higher. So currently, as you can see, the price moved exactly as I expected it to here. The price respected the first key support zone and then it pushed higher and has delivered more than 100 plus points. So this is how the euro dollar price action has moved here. Now let's move down to the Bitcoin. So on the Bitcoin, we had a bearish divergence in play. As you can see, the price has created higher highs and the indicator has created lower highs. And I was expecting a correction to happen in the form of double wave down before any further continuation higher. So moving down to the daily chart, we had strong bearish momentum here, and the price has created lower lows with indicator supporting it. At the same time, we also had a strong breakout below the support zone. So these were the bearish evidences which supported the weekly bearish view. And on the H4 chart, there was a bearish trend structure with the price creating lower highs, lower lows, and a correction was happening at that time. And I marked these two strong resistance zones where I expected the price to respect this zone and move over further. The price is still holding in the first strong resistance zone, and my bearish view still remains the same here. That is, until these two strong resistance zones hold, I expect the price to move over further in the short term. So that's all for this week. Hope my forecast helped you in your trading. I'll see you in the next video. Thank you.